Attendees are in listen-only mode.
Okay, welcome to our latest webinar. This is Management Challenges and Opportunities for the Banking and Consulting Sector in 2016. We have a very distinguished set of panelists with us today. First, let me get some admin issues out of the way. We are recording this webinar. It is an audio recording. The recording will be available 2 weeks from now probably, given that it's Easter break here in Cyprus and everything's going to shut down for several days. We will also have a full transcript of the event. We're going to release a blog and the transcript, so for those of you who actually would rather read about everything that's being said today, that will be available also in 2 weeks. So with that said, let me introduce our moderator, Mario Chavez. Mario Chavez is the General Manager of the European Institute of Management and Finance in Nicosia, Cyprus. He has extensive experience in the area of executive education, learning and development, and consulting. For the past 14 years, he worked as the Director of Executive Education at the Cyprus International Institute of Management, CIIM, and his prior experience includes the position of Manager of Corporate Training Programs at the University of Health in Canada and in business development for the Houlihan's Group in the United States. During his long-lasting career in executive education, he has gained extensive experience working with organizations and individuals and building specialized and unique learning and development solutions for them. He has managed several development projects for large and small companies in Cyprus, Egypt, Austria, Bahrain, Greece, Canada, China, Dubai, and South Africa. With that said, Marios, the floor is yours. Hope you guys have a great webinar, and I will see you towards the end. Thank you.
Thank you. Thank you very much, Mario, for the nice words and a good introduction. So, welcome everyone. It's nice to have you with us today. I hope you enjoyed this live webinar. We have a great panel, great speakers, and a great list of topics to discuss. So I hope this 1.5 hours will be enjoyable for you. So today we're talking about management challenges and opportunities for banking and consulting sectors. Our three panelists are Pamela Miller, Mer Parunakian, and Philip Hammerman. I will ask each panelist to just give a short introduction before we go on with the agenda. Pamela, will you start us?
Thank you, Marios. I say my name is Pamela Miller, and I am the Company Director and Business Unit Manager of Cyprus Eltoma Corporate Services. I have 25 plus years in management, majority from the UK banking sector, working with one of the oldest banks in the UK for 21 years. I'm interested in sharing our experiences today and generating new ideas from the panel, which we can all utilise going forward. Thank you.
Hey, Mer.
Good day. My name is Parunakian Mahesh. I'm CEO of the company KPI Lab. We are working on developing the software for a KPI for collecting data and making measurements. So we are mostly in IT service, but with huge experience in industry of financial, where we made different implementation. And I want today share your knowledges which we made, which we have in area of IT, let's say challenges, IT challenges in this sector of KPI and measurement.
Okay, and Philip, thanks, Mar. Philip.
Hi, good afternoon. My name is Philip Hammerman. I am an investment advisor in fields such as due diligence and corporate fundraising. I've advised on approximately 6 billion euro of transactions, primarily mergers and acquisitions and buyouts. Since 2010, we have a business incubator as well, in which we are supporting digital startups and spin-offs.
Great. So a couple of things before I ask my first question. In preparing for this panel discussion, I went through some of my own experiences and discussions I had with friends in the past. One of the things that we find is that managers usually in any company, in any sector, not this particular sector, they usually tend to blame their turnover problems on everything else. While ignoring the fact that a lot of times people don't leave jobs, but they leave their managers. Okay, so that's a general statement that I would like to make as before we start. So managers a lot of times are to blame. And the second one is something we see increasing, not so much I would say, but it is it's an extended version of the flat management style, which is the holacracy style, whereby you have a self-managed type of organization. So you pretty much remove all the managers' role. You take away all the managers' powers. In any case, just to start then, what are the top 5 management challenges consulting firms and banks in 2016 in your experience, all of you?
Marios, I think I would like to kick that one off, and I would say that one of the first challenges that certainly we had to consider in 2016 would be cost control. Looking at your internal cost control and also the external factors that could potentially impacting on your costs. As I'm sure we'll all agree, the global economy is slowing down, so cost control is becoming critical. Looking from an internal point of view, how you identify and ensure you have accurate records of your costs and expenditure, both up to date and also going forward for 2016, to ensure you can allocate the correct resources at the correct time. But leading on from that, looking at the external factors, we certainly have looked at analysing the impact that compliance requirements have on a business. Compliance is a non-substantial revenue activities. We totally understand that we actually need it. However, clients are not necessarily willing to pay for it. And we are in a very fast changing pace framework. We have the 4th EU directive, for example, and how this is going to be incorporated. And we should also state that we've got no previous practical experience of a central registrar database, and interested how, for example, banks are going to keep this information up to date. I'm sure they'll require more resources. I'm interested actually in Philip, linked to this particular area you mentioned there about compliance. What's your take on the impact that compliance has on the business environment?
I would say it's huge, and events such as the Panama Papers are continually shifting the goalposts, if you will. They're creating a huge burden on any kind of financial intermediary, whether it's a bank or a payment organization or a payment gateway. And these risks, I think, are more substantial than we can imagine. You know, I don't think anyone 10 years ago could have imagined the United States taking such an aggressive role in compliance. And, you know, the fines which emerged from that. And I think this is really changing how a lot of institutional and corporate customers are looking at new business development and looking at, you know, working with existing accounts or dormant accounts. So I think I agree with you. I think compliance is really the name of the game in the banking sector right now.
Yes, I think it's fair to say that it's actually changing the format of the business environment overall. Definitely, I would agree.
And if I can just add a very, very quick comment, I mean, even in the consultancy field, you know, we see in the UK, we have a company in London. There are some things which compliance makes it impossible for us to do, some services which makes it impossible for us to do without FCA regulation, and this is, you know, it's no longer economic to actually be operating out of London right now in some fields.
Mm-hmm.
Mario, anything you want to add on the challenges?
From our point of view, there is some, let's say, chain of the challenges. If we start from the major, it's the money. It's not generating enough income. So this challenge bringing, stopping the IT revolutionary works and evaluating some new technologies and bringing. But from the other hand, new companies, which is a startup companies, fintech, let's say, area companies, they coming to the new this banking sector, and it's a big challenge with the new technologies, with new possibilities, and starting to compete with the standard banking system, even I met the company who, and it's coming as usual when they have no even subsidiary. It's online banking, only online banking, only online transaction. They have no costs for the rental and other, even from people point of view, they have not so much stuff. They're making maximum automatically. And yes, there is some regulation from the government, but anyway, this is a big challenge. And the current bank area, it's looking to that at some time don't do anything. From the other hand, consumer expectation is quite more because they have now a possibility to compare what the kind of services they have online and in a standard banking, and let's say asking for more these services from the standard banking system. So from the technical point of view, it's a big challenge for current situation for the standard banking. They not want to spend more, but in same case they going down.
Okay, so in summarizing this first point, I guess the overall points I gathered from the panel is that the regulatory pressures are creating a big, I guess, increase in terms of cost for the bank, if I'm correct, and the consulting firms as well. Regulators, Philip mentioned FCA, fourth ML Director Pamela. I will also say the capital requirements of the fourth directive. And so I guess that is creating a big cost for the banks and their consulting firms.
Cost and risk. Cost and risk is how we assess risk now of certain business fields or customers. Yeah.
Yes, cost and risk, you're right. And the second, I will also add the point that I think that's a great challenge as well that Mer mentioned, the issue of online banking, so the in-banking, getting the clients to move from the traditional banks to the online banks as well. And so I guess the increasing competition from fintech kind of companies, I would say, summarizing that point. And another one point that Mer mentioned was a consumer expectations. So the experience, the consumer, what they're expecting now from their banks. And I wanted to add to this before we close this section. I wanted to ask to this: what do you think about them, about the restoration of the sector's reputation? I mean, the reputation of the sector is not where it used to be, the banking sector, at least. Do you think this is costing companies something or their staff? I mean, used to be proud to be a banker. I don't know if that's the case anymore.
It used to be a job for life as well, yes.
Yes, so is that a reputation issue because people still don't, let's say, trust banks? I'm not sure how to put it.
I think there is, yes, I would say there is an element of that, and the trust will take time to rebuild. And hand in hand with what Miguel has said there with diversification and how we can try and tie both together with the pullback obviously on the compliance requirements which we all have to comply with.
Okay. Right. Let's move along then.
Can I just make a very, very quick comment just from the, I think we talked about banks and fintech. If I can just talk very briefly on the consulting side of the operation. I would say that the key challenge we have today in 2016 is the extent to which any consultancy can prove a tangible bottom line contribution to client results. I think the fat fee days of the 2000s are over, and I think who's being hired today are the companies that are taking commercial risk on their own account or being paid increasingly, say, on a success fee basis or a mix of retainer plus success fee. But today you really have to prove your contribution to the bottom line, and I think that does reflect a very, very competitive environment, between fintech and banking, but also from the other investment competitors to the big bulge investment banks. And I refer here particularly to private equity. I would say that the biggest competitor to traditional banking today is not so much financial technology startups, but private equity firms. The capital amounts and the leverage amounts are massive. The expectations are very high. The quality of staff employed is extremely high. There's some extremely ambitious teams and valuations going around. And so I think, you know, that there really is this private equity approach even in consulting right now.
So you say that in consulting, it's more about changing the game rules, let's say, changing being more innovative in the approach of what you provide to your clients. And I will guess that consulting also faces a similar competition from the consulting technology firms. You know, you find1consultants by the hour all over the world hiring from websites now. Just
right, yeah. I'm not so worried about that in terms of the very specialized skills. I think our greatest competitors are not other consultants, or not other accounting firms, really the in-house staff of banking and private equity firms. Okay. They have brilliant staff, and you know the key question for them is, you know, do they outsource, do they get an independent viewpoint, or do they go in-house?
Okay, good. Thanks everyone. So our next topic for discussion is looking at the top 5 important management decisions in 2016. What would you say would be decisions that the management needs to make in 2016 to pretty much face these challenges? Philip, you want to take that first?
Sure. I would say that the first challenge is to what extent you can manage growth with lower resources or at lower cost. So to what extent you can identify new business opportunities, new clients, while restricting the normal business development costs which were traditionally associated with that. The second is to what extent you can innovate, so precisely so you can keep up with changing expectations, changing technology, and so on and so forth. And the third has not changed. It's to what extent you can retain talent, you can retain the very uniquely talented people you need to succeed today in a very competitive and very fast-moving environment.
Okay.
I would like to add to that, Philip. Actually, you're absolutely right on a number of points there. First of all, the diversification of your product and service line has to be given attention, and literally looking at the resources and the knowledge base that you have in your current talent pool and how you can utilize that to diversify into other fields 100% is essential for 2016, which also ties on to the point that Marios, you mentioned at the beginning regarding staffing and staff turnover and retaining your talent pool. And really one of the key points to do in 2016, certainly at the beginning of the year, is have these open discussions with your resources to see where they see their career within the company and how we can utilize the knowledge and experience they have to help diversification, especially in corporate services. For example, you mentioned Panama, for example. We also have the pressure on tax havens that we're all very aware of, so reliant on that revenue stream is not going to be successful in this industry in 2016. So you do have to look at diversification, which then leads on to restructuring of roles and responsibilities of your resources, and also your management. Marios, you mentioned there about the style of, or the style of the management team that you have, the flat approach, etc. You do need to look at restructuring your management team accordingly as well.
Okay, good.
Absolutely.
From my point of view, it's at the moment most important to develop a team or keep the team on board, because sometimes for growing and reaching some targets, we need to have a really trusted team, and it's sometimes more important than to have a huge strategy or to make to put some targets. Because if you don't have this team, I'm looking from the IT point of view, but anyway, this team have to be in the company. And when you have a team, and second thing, it's as I said, it's a strategy. strategy have to be in long terms because most of the at the moment in crisis situation, most of the banking sector thinking about the operational things, which they have to do in a daily basis. But they have to understand that for reaching some targets in the future, because in days the crisis can stop or change something in the environment, we need to see some perspective when we have to reach and reduce our current way to this strategy. It could be different ways. In a, let's say, in mathematical point of view, we're saying that we have a different ways. We are modeling, we are making a plan how to reach to these targets. But targets have to be same the end of the way, but the ways could be different. That's why do not forget about operational things, but do not forget about the perspectives. This is the most challenge. So company need to understand where are we going, whole of the company and whole of the team. And after that, this team will understand each of them what should do.
Okay.
Can I just add to that? I do agree with what you're saying there. I think it's very important that there's set target objectives and that the team fully understand what those are, and also that you review the performance and as we're going along to ensure that we're all in the same boat. Clarity of what is expected is very important. There's too many times you can have issues with the form of Chinese whispers. You know, we have an international staff base, perhaps, staff member understanding a request or the target or objective in one manner, whereas the manager may actually be requesting something completely different. So that's really important, which will then tie to also the reward and recognition system which you have in your company. And we should also accept, identify and accept how people handle the changes and adapting. You know, some will take it easily and some will not be so flexible. So we have to ensure that the staff who are perhaps not so flexible, they're afraid of their job security, they're out of their comfort zone. As a manager, we absolutely have a key role there in how we help the team members in that challenge and time that they have, so that we all understand we're all in the same boat, but we all have to go in the right direction, which is McGann said, the setting of the targets and the objectives, the goals that we're trying to achieve.
Okay. Philip, anything else you want to add? Shall we?
No, I think I agree with what's been said.
Up then. Basically, I've put a few points just to summarize the section. I see from the beginning, Philip said something which I think is very important, is identifying new products, new services, basically. So shifting from maybe management decisions in 2016 should be that we need to look at the revenues part as well, not just cutting costs, I guess, overall. In all that, we had some comments from Pamela Miller adding that, and Philip adding that we need innovation, diversification, and restructuring. So we need all of these aspects to be included into the overall strategy that Ujer made a point later on about having clear strategy with the targets, the plans, knowing where you want to go, and have performance indicators identifying each stage of this journey of the organization, I guess. And I guess in doing all of this, a big driver will be the people, and Pamela added towards the end that we need people to be able to accept the change. So I guess we need to create a culture of change because that's not something that will happen over a couple of days. It's something that takes time, and we need to already have that culture, or we need to start building on the culture. Now, I wanted to make a couple of extra points on this, though. I was thinking of a couple of things while you were talking. I think that it's important to look at the new products innovation, but I also think that it's important to put emphasis, more emphasis on business intelligence in this year. I mean, knowing the facts, I mean, knowing what your clients want, knowing really what have the analytics of your company, your numbers, your sales figures, your expenditures. I think that what your competitors are doing, I think that a lot of times we ignore this business intelligence. We don't have dedicated units or dedicated people just dealing with numbers, facts, competitors, figures, and feeding us with this information. So we're not fully prepared to create strategies and plans if we don't have all the data. So I think that it would be good for companies to invest in years to come in business intelligence in their companies. And one thing that we saw in 2016, in 2015, and I think we're going to see more of that in 2016, especially in banks and consulting firms, and I think that's again a management decision, are more mergers and acquisitions. I think more companies are coming together. I mean, this highly competitive market, the capital requirements from banks, the lowering of price fees for consultants, bringing companies together. So again, that's another solution, I think, that can make a company more profitable. Okay.
Okay.
Thank you all. Now, we talked about this point earlier on, but I think that I also have a couple of comments here as well I want to add to this question. But just the question is cutting personnel costs without dismissal in times of crisis. This is a topic. Do we need to restructure the business or temporarily revise working hours? So it's all about restructuring or revising working hours. What's your opinion of that?
I think I would say here. Oh, sorry.
No, go ahead, Pamela.
I
was just going to say that in the current situation, it's not rocket science. The information is all around us. We cannot continue as we have done in the past. Changes are here. If you look at some examples, Standard Chartered Bank in Singapore, for example, 300 staff reduction. There's a local bank in Cyprus contacted their staff and asked who would take early retirement by giving an incentive of a 2-year salary package. So we do need to be, for us, looking at it as a company, we identified that the reduction in hours wouldn't help us much at all. We need to staff more, not necessarily less. However, we did take the decision to place recruitment on hold. But linking to the point that you mentioned, Marios, regarding business intelligence, you need to be able to measure and compare, and as a manager, you need to see where you're underperforming. An example of measuring and reviewing management departments, we were able to identify we had an underperforming manager for a number of months. So we could see a trend there, and if you don't measure it, you're going to miss it, and maybe that's a resource there that you could be utilising in another manner within the company. And that's maybe on a negative example. On a positive example, also by doing this measuring, we identified trends where certain managers were achieving and could bring areas under control and do some form of a diversification. So we were able to identify that and then utilise that information and apply it in other areas of the business. So I fully support your point regarding business intelligence, both historical and future.
Okay, great. Philip?
We are we're a consultancy firm. We are employee-owned, and we're very much performance-driven. And in this environment, we've accelerated firing people who don't meet the standard. We have also, in some cases, identified high performers from other companies that we've been able to recruit into our firm. I'm afraid it's a really brutal environment right now, and the lower performance that we might have been able to accept 10 years ago, it's simply no longer acceptable today. That's not just because of the simple cost element or the cost dimension to this. It's the fact that things are changing so rapidly, we simply cannot, we can't accept this any longer, basically. So it might be, maybe the downturn now is, 12 months, but keeping underperformers on board means that the next 18 months after the 12 months will go a lot slower or may incur further damage. So I'm afraid that for us it's very black and white, I'm afraid. That if people are not delivering, they have to move on.
Okay,
I
but
think
how
I
do
would
you,
also say,
Philip, I guess in your case it's all about billable hours. How do you track the performance?
No, it's a client relationship.
Hello, we're losing Philip.
Ability to meet internal performance standards. There are a number of KPIs. And the KPIs that we look at, it's not just billable hours.
Okay. All right. Okay. Yeah.
I was just going to add that I would second that, Mario, as underperformers, that does need to be addressed. You do not have scope in 2016 onwards to carry. Absolutely not. Obviously, as a manager, the management team, you have a duty to help underperformers within a specific time frame. And yes, you can set targets, etc. However, going forward, that is the reality of the situation. And people need to understand that.
No.
Yeah, do you want to say something?
Yes, I want to say following, for as we previously said, if we putting some targets, we have to understand what kind of resources do we need to reach these targets. It could be, for instance, it could be some turnover of some number of the customer which we want to bring to the customer. So this number of the customers, we have to understand how many people can work with this number of the customers. And based on this, we have to understand the business processes. We can say, okay, 3 people can work with, I don't know, 100,000 customers. But it's not, it's unbelievable. It couldn't happen. That's why, from one side, we have to make a normalization of the, on the papers, for the first, normalization of the number of the people, comparable with the tasks and number of hours which we need to have for supplying these services and customers. And after that, as Philip said, we need to understand how and what kind of criteria do we need to put for each of the person. And after, it's discussable. It's not like, yeah, let's cut some number of the people and change the number of the working days. Because, yeah, it's a not seasonable area. So it not change as a retail or something with a maximum and minimum. It's a more or less standard coming. But anyway, we have to understand minimum. How much do we have? We need to make a core of the team for each processes. And after to understand how to reduce if there is some rising of the number of customers or something, whether everybody is proceeding or going down. So it's a mathematical thing which we have to put and reduce to our targets. It's not something we can take it to HR and say, okay, just make a decision. Do we need 100 people for half day working, or let's throw out and leave 50 people for whole day working? So everything needs to be calculated and reduced by our person. And from my practice, I can say that some companies throwing out some number of the people, and after half of the year, just thinking how to train new person to deliver to the customer. So they lost good and skilled people. After that, they spend the time, spend the money, and we don't understand how they are motivated new people in the new team, and they're becoming more and more new feature questions which we don't even know how will be in this case for the company. So not so simple task. Processes, targets, and resources. We need to combine all together and understand.
Okay. All right. Anyone else wants to add something on this after McGann's comment?
I would just like to agree with what Miguel has said. You're absolutely right. It isn't just a simple task, for sure. 100% agree with that. You have to be able to identify your key personnel, but also look at your weak links. You have moral, HR, legal implications that you need to look at before you're actually making any decisions regarding the underperformance. And you've got to consider for sure the expertise and knowledge of that person and how that can benefit the company. So it's not a straightforward decision making. It can't be seen in isolation. I fully agree with what you're saying.
So it's kind of, you need to put all the people on the canvas. Just look at everyone individually and see how they can contribute to the organization?
Correct, and looking how they can support any diversification. And I'll use the old cliche of thinking out of the box. Certainly, we've got resource. We need to do X. Okay, how are we going to achieve that? And utilising all resources available. And you know, certainly within Eltoma, we use all the resources in different areas. If you ask a number of our team, the things that they're doing now, were they doing it last year or 3 months ago? For sure they were not.
Okay, all right. So I guess for sure 2016 takes us back to the, on this issue, takes us to the original, to the first comment made by Philip that people need to perform. Low performance is not acceptable anymore. We need to make sure though that we do have the right structure and processes, as Gary and Pamela said earlier on as well. And we identify this at the right moment as well, just to make sure that we keep the talented people, so we don't lose the talented people because they disrupt the business, as Gary said. So, moving on, what type, and this is ties up with the earlier question, I guess, what type of performance measurement is the most efficient for your company? And do you use any kind of balance scorecard tools or any other kind of tools to measure performance in your company? Philip?
Yes, absolutely. But I probably should answer that in conjunction with the next topic, which is the consulting, the KPIs, because it's really the same thing for us.
Yeah.
Yeah, we have a balance scorecard. It's a custom-made scorecard. If we look at one of our key metrics, it is the ratio, it's a matrix actually of effective daily rate achieved versus cash flow cycle. So this measures what is the daily rate that we've actually achieved after all costs, including bidding and reporting costs, have been.
We are
to be collected.
Philip, we lost you for the last 10 seconds. So if you want to repeat after when you describe your performance indicator, please repeat that.
Yeah, very briefly, it's a matrix which measures the effective daily rate versus the cash flow cycle. The effective daily rate being the net income generated per day after all the expenditure versus the cash flow cycle. How long does it take to get paid? But we have a number of other metrics, strategic selling metrics such as our customer growth potential plus the share of services that we're providing, the innovation potential of our firm, a number of other issues like this. But for us, the main one is effective daily rate versus cash flow cycle.
Okay. This was done internally. That's your own system, you said earlier on?
Yes, yeah, and what we do is who
decides on the indicators? How is that decision made?
Sorry,
from the strategy, is it, what is it?
It's a mix of financial and operational indicators. So we know very well what our break-even rates are, what our investments, our own investment cycle is, service,
okay,
and then we can measure effectively on a project basis, a client basis, a portfolio basis, what the actual results are.
Okay. I'm going to Gerd now. Gerd?
I didn't.
Hello?
Okay. Hello? Okay. Do you hear me? Okay. You ask me or I don't hear?
Yes, yeah, I'll ask you a question.
Sorry, Mario. We are using some kind of balance scorecard because if, like a Norton income plan, we try to understand how to make it, it's quite serious methodology which is not, it couldn't be implemented in, let's say, medium companies. But if we make it more simple, as Philip said, based on the KPIs, it's very, very interesting, becoming very interesting solution when in a top KPIs, in top targets, you can make it as a balance scorecard, and after you can make like a drill down with the corporate KPI, connect your corporate KPI to the KPIs of the strategy, and after you can make a decomposition of the corporate KPIs to each person in a company. So it could be some aggregation for evaluating person for motivation, where you have a group of corporate KPI, you can have a group of the financial or functionality, sorry, KPI, and some personal KPI. So 3 groups of the KPI, and depends of the level of person. It could be manager, KPI weights, group of KPI, it's coming bigger weight. For instance, 80%, if it's a top manager, 80% coming to this group of KPIs. If it's some person who is working with not so high level, functionality KPI weight could be bigger or not. So it's a combining of the KPIs. It's not clearly we can say it's a balanced scorecard, or we're also making a management by objectives or something else. It's a combining of different methodologies which every department using for each his cases using this information. The main thing that we have collected all KPI together and using each department using and combining for himself this part of the KPIs.
Okay, all right. Pamela?
Okay. We're currently in our company, we collaborate very much so with McGann. We have the KPI system he's just mentioned, which we'll see shortly. Regarding evaluating the actual success, we use a number of methods. Yes, KPIs and performance management appraisal system. We also have observation, training, assessment, professional qualification is another area where we measure performance, coaching and mentoring on the job evaluation as well. Okay. I'm a very much firm supporter in the SMART principle linked to KPI.
Okay. So I guess this whole issue is about having some sort of a compass in terms of measurement, having some sort of a value added to the activities, and being able to actually measure the results overall in performance of the employees in a transparent, I guess, way that can also avoid any kind of misunderstandings within the group and the team of employees. I like what McGann said about the individual and the department and the group KPIs, which is kind of tidying up the whole thing together. And also I like an indicator that I think we mentioned in the beginning, which wasn't the daily income, how long it takes to make the money, but it was the innovation indicator. I like that, key performance indicator of innovation. I think that's important because it looks at something else rather than the actual, it looks at the future, I think. Good.
Yes, yeah, and those can always be split out, so we don't need to measure them against the global performance. We can measure them on a, on a more favorable product cycle or innovation.
Yes, so it's something that shows kind of seeing in the future of the company as well, the long-term strategy, not so much the daily now.
Right.
Okay.
Right.
So in terms of the next section, I have a few more questions there because we should be pretty much wrapping up within the next 15 minutes. So I will take the next just like a statement and say employee accountability. Overall, employee accountability, is difficulty or challenging? How do you measure? What is it about employee accountability? Because a lot of the discussion is made from the other side. The business is on the side of employee engagement, motivation. We need to make sure our employees are engaged. So if you read any kind of books, especially HR books, they will talk to managers that they have to have employees that are motivated, engaged, and I haven't seen a book called Employee Accountability. You have to have accountable employees. So what is how do you do that? How do you create that culture where they are both engaged but also accountable so they can own their responsibility? How do you do that?
I think one of the first things I would mention there is linked to the key performance indicators, and having that discussion and agreement to the key performance indicator, but firmly following the SMART principle, so that you can get the objectivity through the performance management. And we certainly find here with that, it gives clarity, it gives the objective review possibility, which will then lead on to reward and recognition. That would be for me.
Okay. But how does that, I mean, how do you make employees work more autonomous in that sense? Because accountability is about having autonomy, it's about being able to take their own decisions, take their own risks as well, and do.
Absolutely. If I can take that one, actually, Mario. Within our culture, autonomy is very, very important within Eltoma Corporate Services. We have a culture of open communication, and I'll give you a couple of examples what I mean by that. We have a flexible management style, so no manager, including the senior managers, have an office, for example. We make ourselves available to all the staff, so there's no hierarchy in following up the line. If you wish to speak to a senior manager, of course you can bypass their manager. We also try to not patronize and limit people, so we encourage people to take the initiative and giving them that empowerment. And yes, of course, sometimes the right decision will not be made, so you have to give some guidelines to help them, and also hopefully to learn from that mistake. So for me, it's down to the internal culture within the organization. I would say also we utilize the situational leadership model that was developed by Paul Hershey and Ken Blanchard. I'm sure you have certainly come across that. Knowing managers need to know their staff members well to see where they need to lead, drive, micromanage, and where they do not. And we certainly encourage limited micromanagement within our organisation. And it seems to overall pay off.
Okay. Philip, you want to add to that?
Sure. I mean, we again, we are a very performance-based employee-owned firm, so we have two types of positions in the company. We have partner track and non-partner track. The partner track positions are fully performance-based, and when people ask me, what does it mean to be a partner? It means that at the end of the month you have to pay all the bills, or you're responsible for your share of the bills. So that means that accountability can be measured in a very, very dynamic and very effective manner, basically. Besides that, we have a consultancy competency framework, and we actually measure accountability based on 4 levels. The first is the individual level. Is someone accountable to himself, to their own aspirations, to their own vision of themselves as a consultant and as a service provider, whether they're in our firm or not. The second is to colleagues and direct reports. The third is to the company, and the fourth is to society as a whole, which means we have a CSR statement, and we do expect people to standards to include things like ethics, environmental care, but really primarily ethics. We're in a sector where it's very easy to cut corners, where there are huge incentives to cut corners and behave unethically. And one of our main responsibilities is really to try to avoid that for everyone's good, even though the short-term gains may be substantial. So accountability is, I think it's fairly straightforward to define in our firm. And we have the tools to measure it, we have the tools to foster it. And just one final point is through our work across Europe and also with teams further afield, there's a very big cultural component to accountability. It's a huge cultural issue in terms of
values of your organization. So you just mentioned the values, and you say that each member of the firm is actually accountable to kind of work against those values.
Okay. For those values, yes, and for each other. I mean, we recently had one partner who did not perform at all, causing tangible financial impact. So it's very easy to judge accountability in that respect.
Okay.
But there's a very big cultural issue when it comes down to who you are recruiting and who you decide to work with. And if you have these values and you have that system from the outset, then a lot of accountability issues are very easy to diagnose or simple to diagnose when they do appear.
So it's easier to have the values and the culture, then it's easier to have accountability as well. Because if you have those,
yes.
you have something to be accountable for. Is that what you're saying?
Exactly, yeah. That's exactly right.
All right. Gerrit, do you want to add something on the accountability?
When you ask, I start to think how to, let's say, because of our company's, let's say, IT company, team is very important. Team like family, and everybody in family understand that if he don't do something, somebody else have to cover his volume of work which he didn't do. Or if he don't do it, will bring some collapse of the situation. So it could be chain of the problems for all team. For the first, I think, most important thing, it's a clear motivation system, clear maybe bonus system or whatever. It's not most important, I can say. It's not most important how they're gonna get, but very important they have to understand what is the penalties, why they're getting the bonuses and these things. Everything have to be on a paper, very clear have to be, so they not feel that he's getting better or worse than me, because it's a organizing by himself. When he looking to the figures all the time, he understands that what's most important. Also, sorry, but it's a family when he is growing, because one person can make mass things for whole team. This could be, it's a cultural question, but anyway, it's very important. So we are trying to get the people who mentality is closer to our mentality, because we are going there and living more than half of the life in the work, and you couldn't comment all the time to be on a pressure. And as Pamela said, there is no hierarchy. What does it mean? It means that we have a respect from the people. Respect not to his level, it's a respect to his knowledges. So let's say I have some knowledges in software development, and people might, I want to say kids, my friends knows that how much I know, and they can come and they respect these knowledges in my side, and I can help them. Same, all of our guys, all of them know something, and we respect, and this bringing quite much help in our situation. So there is no people because he is a good, bad, or I don't know, his level is a top position or not. Knowledges and respect as a person. As a person, he know that in same cases you will do same things and will be same. So from my money point of view, we are solving. Everything have to be clear, and the personal level have to be same. The cases for outstanding, there will be very simple instructions. So you have, for instance, 500 bonuses, points, and each time if you're making something which is not acceptable, you are just going down in these bonuses. After all, sorry, you are leaving the company. I understand that it could be, but it's a trustable system.
Mm-hmm. All right. Okay, interesting points from everyone. I would say that this I just wrote a few keywords here, but I guess in the overall question, accountability, if it's difficult or challenging, I guess in summarizing everything, I think that what I come out here is that if you have a company which works in teams, has the right culture, it has the values stated already, it has a family spirit, there is respect for each other, there is knowledge and willingness to share that information with your colleagues, and also trust, then accountability is not such a big issue anymore. It's kind of having the right recipe of these keywords within your company culture, DNA embedded, and then things can be easier, let's say, and people will be accountable for their actions and motivated and engaged to do their job. Okay. Anyone wants to add anything on this?
No.
All right, good. Look, the good news is that we're coming towards the end. The second good news is that we have all the people with us so far, so all who joined us at the beginning, so that's good. And let me see how we're going to finish this conversation. It's I wanted to see because we already said a few things about key performance indicator management software, which is the last topic. And I think that we have already discussed the usage of that. And I think that, correct me if I'm wrong, if anybody wants to add anything on the last point. Or I wanted to see if there are anything else you want to add on the ways to evaluate the stuff. Anything else other than what we already discussed. Because if you see at the last 2 points of the agenda, then we can pretty much have covered them already. So I wanted to see if there is anything else you want to add on these last 2 points. The questions are how to evaluate stuff, ways to evaluate stuff. Pamela said a few things earlier about reviews and things like that. I don't know if you want to add anything more on that. Yes.
Marius, I want one more thing to say about evaluating. Very important to have some, as an IT, I can say, very important to have some technology to proceed with evaluating. Because, for instance, we have 10 people. Sometimes we don't need even to measure these people with some KPIs or something because the number of teams is so small, so you understand all of the people were doing, and this is a like small team. But when you're coming to 50 people or 100 people or 500 people, I don't want to say about 25,000, but anyway, it's happening. You are starting to find out some ways to combine some kind of methodology plus software, because when you're working with some Excels or some table software, you can work it very, very fast, but when you're starting to combine it, for one person we are evaluating in some criteria, some KPIs, it's very easy to do. But if you have a turnover of the people for 5%, it's becoming huge mess of work. When you're trying to combine all the things, level by level, to have the strategy, for instance, of the company, to calculate, in the end, what do we have? It's becoming a lot of work. And imagine in our practice, we have an energy company, the biggest energy company, where was 8-9 months just they making a planning, just planning of the values of KPIs. And after that 8 months they just collecting, because in every level, company level, department level, company level, group of company level, they have to manually work with these things. That's why years ago we start to understand about how to proceed with this kind of work, because sometimes for yearly bonuses, you just need to proceed with this number of people. But if you want to make quarter bonuses or monthly bonuses, it's a very, very big challenge to you to work. From one side, you need to increase number of the people who are working with the Excels, or you need to make, let's say, some automatization to collect this data on. So that's why I shared the Excel, not Excel, sorry, PowerPoint presentation, where we're describing how easily we can do that, how fast we can do that, and also these have to be comparable with the costs of the proceeding. What is the cost of the proceeding? We are taking a people who is gathering this data. We are calculating their salaries and timing expenses, this kind of value we are taking, and comparing what benefit they are getting. Plus, what we don't say about some mistakes, some strategical mistakes, which we can get not now, when we're taking the dynamics of the situation. We can find out this dynamic, good or bad, months before when it happening. Not after a year we understand that we are not reduce our strategy and didn't reach the targets. We are now understanding that something happening and can step by step smoothly reduce it. Is it clear what I'm trying to as IT person deliver?
Okay, so I guess we get all of this is outlined in the presentation that you have shared with us, yes, on the handouts.
Yes, yes. This information I shared, it's very, let's say, business-minded phrases inside, no such kind of technical things. But if people want to, if people want to find out more, we can help. And as customer, let's say, some customers can share the knowledges and explain how to do that.
Okay, so any more closing remarks from anyone? We need to wrap the webinar, so we have another, like a minute each. If Pamela wants to say something, and Philip.
If I can just, on the back of what McGann has said there, I was one of those persons with the many Excel spreadsheets trying to manually calculate in order for the bonuses, and with the time pressure which we all are faced with, you've got to have technology that will do some of this and eradicate some of this manual work to help objectively measure your staff's performance.
So automation is a nice tool, automating everything.
Very much so, yes.
Okay.
Very much so.
And Philip, something like an ending before we close?
Yeah, only that I think we've all mentioned that things are becoming increasingly competitive in 2016 and onwards. There are competitors from new sectors and unexpected directions. This is both a threat and an opportunity, and I believe that today the business model of a company and its ability to manage is one of the main competitive advantages that it has. And I think thanks to IT and thanks to a number of other knowledge factors that we have, I think this is increasingly being recognized. The question is, how fast can companies and company owners adapt to this? And can they really walk the walk, or are they just talking the talk? That's about it.
All right, so we have Madeo joining us back. So as from me, thanks to the panelists, thanks to everyone for listening to us. And Madeo, do you want to say a few more things before we close?
Yes, first of all, thank you very much, Marius, for moderating the discussion. Thank you very much, Philip, Pamela, and Mer for your great participation and for a lot of valuable information that you shared with all of our members and everyone else who signed up. I added the handout for Mer's presentation. We will also be adding that to the blog post and the transcript for anyone who wants to, read about the event and take a look at the presentation. Get in touch with Mer about the software. We apologize for the technical difficulties of not being able to show you the screen, but we'll work on that for future events. With that said, the transcript will be available 2.5 weeks from today, given the Easter break. We'll also have the audio recording. We'll email everyone the transcript and the audio recording. So with that said, thank you very much. I hope those of you here in Cyprus have a lovely Easter break coming up, and hope to do this again sometime soon. Okay?
Thank you very much.